Hello, you're listening to the Love and Money Podcast with Shakira, and today I'm going to talk to you about what the Fed is up to. So, the Fed, they plan to start tapering, and they plan to start it before the end of the year. Most likely around November, tapering will start. And what tapering means is that they are slowly taking back that stimulus money that they put into the stock market during the pandemic. So the Fed, they have been buffering up the stock market. That's the reason why you see like all of these businesses going into closing and um, all these people losing their jobs and layoffs. But yet and still, the stock market has not. It's falling, but it's not completely depleted, and that is because the Fed has been in to buffer it up. And so they have been they've been buying bonds, $120 billion every month. That's what they've been doing. So that's how much money they have. They have 120 billion every month. That's what they've been putting into the stock market. And the total is up to $4 trillion balance sheet. Well, most likely in November, they plan to start the taper, which means to start pulling back that money that they put in to keep the stock market um, going and running. So that taper is expected to start before the year ends, most likely in November. And so, why should you care? Well, they are concerned that they will start seeing a massive sell off and that the stocks will start to plummet because their buffering effect is no longer there anymore. And so they plan to see a massive sell off as a result of doing this taper, which is expected to start around November. So if you're in the stock market, then you might start to see changes going on in about another month because they are starting what they call the taper. So there's a fund called the Internet Monetary Fund. And so they are warning about the risks of this sudden steep decline that may happen in the stock market as a result of the Federal Reserve and central banks withdrawing their support. And so that is what is currently going on as far as the stock market and the Feds. They're expecting a sudden decline that we've never seen before. And so, on the positive note, there have been millionaires made, created during rough times like this. And so, what people do is people that know options, they're buying puts. So, people who know options, they're making money whether the stock market is going up or down. So, when it's going up, they're buying calls. When it's going down, they're making puts. And so, they're making money whether the stock market goes up or down. So, that's what the traders are doing. People who are long term investors, on the other hand, what they're doing, people who have been in the stock market for a long time and who have seen a lot, what they're doing is when we see this steep decline, they are buying the dip. So essentially, what's happening is the price is low. It's way lower than it should be. Some people panic and they sell and they get out. Um, and so when you do that, you end up losing money because you panicked and you got out. But people who are experienced investors, when they see this dip, what they do is they buy more because essentially what is happening is you're buying something for a lower price than you would normally buy it for. So you're getting it on sale. And then when it goes up again, you're making this massive amount of money. And so the good side of what is about to happen is that if you stay in it, then you are getting on sale, and eventually you will be generating money just because of the fact that you are in the stock market. They say that at least 48% of the population are not in the stock market and they don't know about the stock market whatsoever. So just the fact that you're in and you know about it, that is a good thing. So that is the main event that they plan to happen, which will come around November. Also, they expect to see changes in the housing market. They expect that the housing prices will decline over the next 3 years. It's estimated to be anywhere between 14 percent to 22%. So they expect that to happen over the next 3 years, price decline. So that is good for people who are interested in purchasing homes. Um, so even though we're in the middle of a pandemic, it is still good to purchase homes. If you have the funds, it's still a good idea to purchase a home. They're expecting that those prices will decrease. Like currently, they're kind of high, but they're expecting that those prices will decrease. And then that will be good for people who want to buy the homes. Not so good for people who want to sell them, but for people who want to buy it. They're expecting to see, as far as cryptocurrencies go, the value for cryptocurrencies is currently at $2 trillion. It's still considered lower than it's still considered small compared to the stock and bond markets, but it's a very high value of $2 trillion. And so cryptocurrency is very promising for people who know of cryptocurrencies and who are learning about it and studying it. So that is what is going on with the markets. They expect this big change to happen in November. So we've been through a lot, we've seen a lot. We all made it. We're still here, we're still alive, we still survived, and now it's time to thrive. So no matter what you're, just know that you are going to thrive no matter what it looks like. So just keep reading, keep listening to podcasts, and keep taking action. So this is the Love and Money Podcast with Shakira. If you like this podcast, please share it with one other person. Hit the like and subscribe button, and please leave a comment. Thank you for listening.